Good afternoon, everyone, and welcome to Stock Market Today. Alyssa Quorum and Justin Nielsen here with a look at the action in today's session. A continuation of the strength, Justin, that we saw at the end of last week. The question now is, does this rally have legs?
Yeah, exactly. I mean, that's the question. And I guess I can tell you that in a couple weeks, whether it does or not. But for today, we'll go ahead and take a look at a lot of strength in the semiconductor area. Also take a look at some of the retail. TJX jumped on my screen today, but let's talk about some of the other department stores that we're looking interesting as well. And then we can go ahead and end it with a little bit more of a boring play, insurance. And that's Allstate.
Okay, well, we will walk through each of those charts, but first, let's analyze the market action. Look at the NASDAQ composite here, up about 1.6% for the day. We had the S&P 500 up about 0.9%, the Dow up 0.6%, and small caps. So the Russell 2000, tracked by the IWM ETF, up almost 2% today, Justin. So the shifting tone that we saw at the end of last week continued today in a big way.
Yeah, so I mean, what we were seeing before was we had that reversal that happened on Monday of last week. So last time you and I were doing this, it was promising action, but there was no follow-up on it. That was an expectation breaker. It really didn't do what we expected, and so then it just kept on inching down, making a new, undercutting the lows of the previous day each day until Thursday, where we had a reversal on that day, and then Friday we followed up. That's the kind of action we expect after we see a reversal. Now today, we're right back there at new highs. Again, this is where a lot of people are real happy. The birds are singing, the sun is shining. But now our concern switches to, are we getting extended? We had, some very powerful days here. It was a little bit harder to find things setting up because a lot of the best stuff really came out of the gate at the end of last week.
Right. Yeah. So, okay. So let's talk about, are we extended or not? The NASDAQ closed about 2.5% above the 50-day, whereas we could also look at QQQ because in this area, and towards the end of July, it was 6.7% above the 50-day line. Now it looks like we're 3.7% above the 50-day.
Yeah, so in terms of being extended from the moving averages line, we're not at the extended territory yet, because, and part of this is because we had that pullback, it did kind of give us a chance to let those moving averages catch up, especially that 50-day moving average line. So the fact that it's been able to rise and while the indexes were going flat, that kind of helps you not get extended. But again, you could just see a few more powerful days like what we've seen recently, and we could quickly get into that extended territory. And again, we've been trying to really focus on a lot of the reversals and some early entries. We did a whole podcast on that last week with Chris Gessel, talking about doing that over breakouts in a lot of cases in this type of market, just because the breakouts have been a little bit more failure prone, whereas those reversals have been where it's at. And that has to do with this market that has really just not given up much ground. It's any dips, there's the buy on dip mentality, and we haven't seen a 5% correction in the S&P 500 for over 200 days if you look at a closing basis. So that really is unusual, something we've only seen 8 times in the past, and this is coming from Dow Jones market data that they shared with us last week. And 2017 was an extreme example with 400 days, more than 400 days in that market. So, gosh, I'm just making you put up all sorts of charts. You always keep track of everything, so that's awesome.
Good to have the corresponding visuals. Love to keep up with you, Justin. So, it's important, I think, to note that this is why it's very key to stay engaged. Investors may have gotten, discouraged or beaten up here and there, with the fake out reversals or breakouts maybe that aren't working like they thought. But it just shows you there could be a short window of opportunity where the tide changes and stars are aligning, so to speak, and you're
Right.
getting those setups and the market conditions. So you have the wind at your back.
Right. And as Ken and Ed, in your absence on Friday on the SMT video, they were talking about what Charles Harris said on IBD Live on Friday. He was noting how bearish people were getting, and he's like, I'm starting to get a little bit more bullish because everybody's bearish. And that proved to be very prescient analysis right there.
Yes. So IBD Live, always full of great insights there. So there's a look at the market action today. And you mentioned that the chip sector was moving today on some interesting news headlines. So we have SMH, the broad-based ETF that tracks the semiconductor sector, up 2.9% today, Justin. So just a huge move for this ETF, underscoring the strength that we're seeing right now in the group.
Yeah, so one of the catalysts, of course, was that the acquisition of Analog Devices, or their acquisition of Maxim Integrated for Analog Devices, was approved by Chinese regulators. But again, there was a lot of action that we were seeing in the chips last week. Ken on the SMT video on Thursday mentioned NVIDIA and Marvell as two examples. And you can see that on Thursday, those had really nice reversals. Those were actionable on Thursday. You got the follow-up on Friday, and today, while you could argue that they aren't too extended, it really would have been much better to get those on Thursday or Friday, because then you have all of this extra cushion, and I mean, NVIDIA now is even extended if you just took the straight breakout. But we were adding NVIDIA on Swing Trader on Thursday, and and NVIDIA has also been on leaderboard since April of last year, but we've been managing the position on leaderboard, and so here we went ahead and added to our position. We were kind of down on it a little bit. We had sold some on the weakness, but last week we were adding it, and by Friday we were back to a full position in that one. So again, kind of getting that extra buying early can really give you a nice cushion, as the stock gets moving. And so it's much better to have been participating today rather than buying today.
Yeah, it goes back to buying early, which we can also discuss with TJX here, the retail apparel group, still in the top 10 industry groups. And TJX has a streak of multiple gains here in a row on the heels of its earnings report, added another 1.5% today in above average turnover. So some nice volume to the upside coming into the stock on the heels of this earning, which it saw a huge reversal day on that report.
Right. So, I mean, we did break out, and pattern recognition shows it. We did break out above a cup handle with a 74.75 buy point. That's 10 cents above that 74.65 high. So yes, this is a legitimate breakout here. But as you mentioned, there was that early entry that was available right after its earnings, a very strong day. You can see that there was a lot of volume coming in on that day, and the volume continued as institutions continue to say, look, I need more shares. We're reevaluating the pricing of this stock, and we need more shares, and we want it to have a bigger portion in our portfolios. So again, here's another opportunity where that early entry, and again, it wasn't just TJX. I mean, this is one area, but we were seeing a lot of strength in department stores. Ken mentioned on Thursday, Macy's. That was looking strong, ticker symbol M there. That was moving. KSS, Kohl's, had Dillard's, DDS. I mean, there was just a lot of the department stores that were moving on that day. So if you had acted on Thursday on some of these, you would have that benefit of having participated today and maybe part of on Friday, instead of starting your position here and not having much cushion yet.
That's right. We love pattern recognition. It's a very helpful tool for us, but it's also shows you that there's a little bit of an art to what we do. Right. Take the training wheels off a little bit and look inside the base to see what action that you're seeing, to be able to pinpoint a lower entry that can be an optimal moment to get in. And Allstate, ticker ALL, presented an actionable opportunity for investors today, Justin, with a gain of 2%, clearing some recent resistance.
Yeah, so we added this onto Swing Trader today, and this is not as sexy or as fast moving as a lot of the stocks that we have on Swing Trader right now. So sometimes it's nice to kind of temper your portfolio with something that's maybe a little bit slower moving. Now, there was news that they are doing accelerating their repurchase program of $750 million. So that is certainly a catalyst, but this was actually coming on a lot of our screens last week, and it's not the only insurance company that was. There have been others that have been popping up on my screens, and so if you kind of did exactly as you did, you put that downtrend on the handle, it broke above that gave you a little bit of an early entry, and then it broke above that resistance as well, that early resistance. So you've got an opportunity here to buy this at an earlier price rather than waiting for it to hit that 140 high. In addition, again, this is a slower mover, but this also does have a 2.3% dividend yield, so better than the S&P 500 right now. And for those that are kind of into the income play as well, this has that growth component. You can see that it had a nice move in right there in kind of the March June period. So the fact that it does have that ability to move, give you some capital appreciation on top of that dividend yield with some income, that's not a bad combination.
Yeah. Well, thank you, Justin, for walking us through those three charts. We appreciate it. And thank you all for tuning in. We'll be back tomorrow morning with more, of course, on IBD Live. That's the place to be for the first hour and a half of trade. So we hope you join us, investors.com/IBD Live, where we're talking about actionable trade ideas, our take on overall market conditions, which, as we know, Justin, can change very quickly.
Well, we saw it change twice last week. So again, we kind of shifted focus, but that's what you have to do. And as you said before, that's why it's really important to stay engaged, because as bearish as you can be, things can turn around very quickly, and you have to be ready when they do.
So speaking of stay engaged, we'll all see you tomorrow morning on IBD Live and back here tomorrow after the close.